Hello there everyone, this is venelin.ivanov with Allen Tate Realtors in Valentine, Charlotte, North Carolina, and I'm here with Bobby Maloney with Allen Tate Mortgage, senior mortgage broker with Allen Tate Mortgage. Bobby was very nice to sit down with me today and answer some of the questions, general questions that we have in regards to lending. The purpose of this video is just to get first-time home buyers, in general buyers, and also sellers, how the process of lending works. So Bobby, thank you again for joining me for this video. I do appreciate your time and efforts trying to meet with me after all that time. How's your day going so far?
It's going well. Thanks for having me. I'm happy to be here.
Great. All right. So what can you tell us in regards to the lending process in general?
Absolutely. As a rule of thumb, my general advice to most people is you never be too proactive when it comes to exploring your options for purchasing a home or even a potential purchase in the future. The pre-approval process is very streamlined nowadays with an online platform. So a lot of people are worried about how much time it's going to take, and they hear stories about how much paperwork is involved. And I can assure you it's not always roses and rainbows. The mortgage process isn't easy, but with the new online platform, within 15 to 20 minutes, we can gather the information we need and know exactly what we have to do to prepare you for buying a home and what programs are available for you.
Great. And can you tell our viewers what is the difference between pre-qualification letter and a pre-approval letter real quickly?
Absolutely. So pre-qualification letter is based on stated income and stated assets. So essentially sharing with a banker how much money you make, how much money you're able to put down, things of that nature, and pulling your credit. Pre-approval letter is verified income and assets, and us going through the paperwork with you, making sure that everything matches up, whether it may be your tax returns, your W-2s, or your pay stubs, and making sure we're calculating everything. So it's an extra level of security, knowing that there's not anything that may be missing. And then at Allen Tate Mortgage, we offer a certified pre-approval, which we take that one step further, and we will actually submit it to our underwriting system and our underwriting team, who will review all of your paperwork and give you peace of mind that you are essentially conditionally approved going into the mortgage process.
Great.
Which is really
and
nice.
What is the kind of minimum credit score that you'd like to see on a borrower, just to make sure that borrower is ready to proceed with the lending process?
Absolutely. Generally speaking, I normally suggest right around 620. There are different credit score programs out there, just depending on the program that we're looking for. But I tell people if we can get you in the 600s, okay, generally we have some great credit partners that we can work with. So even if you're not quite there, we can also assist in helping you get there. But 620 is generally, a benchmark where we'd like to be.
Yes, and if I'm not mistaken, the different loans have different requirements when it comes down to the credit score. For example, the conventional loan, what is the minimum credit score? Is that 620?
Yes, sir.
Okay. What about FHA, for example?
There can be FHA programs as low as 580. Because of the pandemic and some changes, they've increased that a little bit, so it has been a little bit in flux, but generally right around 600.
Great. And do you mind just give us what is the difference between conventional loan, FHA loan, VA loan, and USDA loan, for example, real quickly?
Absolutely. So a VA, USDA, and an FHA loan are all government insured, government backed loans. So in times there are more relaxed guidelines to help people get into homes. So you've heard traditionally some people think an FHA loan is targeted more towards a first-time home buyer because they have lower credit score requirements and higher debt-to-income ratio guidelines. So government-backed loans generally have a little more relaxed guidelines.
Right.
Conventional loans are what you're going to hear the general public talk about the most, and those are risk-based mortgages. So they're very sensitive to your credit score, very sensitive to your down payment, and that can impact your interest rate. Whereas an FHA loan, not as much.
Okay, got it. All right, and lately, do you see a lot of people kind of refinancing, talking about on the sales side, or people who already own homes? How do you see that process going at this moment?
Absolutely, that's a great question. So the market, as you guys know, since the pandemic, interest rates have dropped considerably, and appreciation has been happening at a rapid level. So with a lot of people being at home more, wanting to do home improvement projects, I've had a lot of previous clients come back to me and say, hey, my interest rate's higher than what the current market is, and I've got all these projects, that I want to work on. So they're able to utilize their equity because they've got more of it now than they've had in the past, and interest rates are lower, so it's a win-win.
Great, sounds great. And how about just another thing? For example, what is the average day for a buyer to obtain, or what is the average days for a buyer to obtain a loan? What is it like? Something within 30 days, 35 days, 40 days? Is that a reasonable period of time?
Absolutely. Our target goal is always a 30-day closing if we can, but we don't want it to be a fire drill for everybody. So there are certain circumstances where we say, we may need a little more time. So on average, somewhere between 30 and 45 days.
Okay. And for some buyers, in order to achieve and make sure that they fit within that time frame, what do you recommend? What type of documents they need to be prepared with, so you can get like an easy start on that entire process?
That's a great question. So normally your homework as a buyer is going to be your standard financials, 2 years of tax returns, your W-2s, your pay stubs for 30 days, bank statements for 60 days. Once again, our online platform is really nice. It will actually allow you to integrate securely your bank account information, which will automatically upload your bank statements, and the same thing as your pay stub. So if you work with, your company has ADP or one of the large payment platforms, that can also link in. So some of that can be streamlined, but generally speaking, it's the pay stubs, the bank statements, W-2s, and tax returns, and then a copy of your driver's license.
Okay, yeah, and since we're on that topic, that sometimes you have these W-2 employees, other times you do have the 1099 employees. In general, what are the recommendations? What would you look at in a W-2 employee? Is it just the pay stub, or would you also need their tax records for the previous, last year or maybe 2 years in the past?
Another good question. So it really depends on individual's compensation program. So if an individual just has base salary, it makes it very easy on us. Generally speaking, looking at a W-2 and a pay stub is plenty. If there's any variable compensation, we have commission, bonus, that's where the tax returns come into play, and looking at pay stubs. And then sometimes we even go one step further and get what's called a verification of employment, where we reach out to HR and we say, okay, is there a likelihood of continuance of this big bonus you received last year, or this commission that you've been receiving over the last 30 days? Is that going to continue, just to make sure that we can guarantee that we can utilize that income on application?
Okay, great. And last question, we're not going to take too much of your time today. Last question is, where are the interest rates right now? And in your opinion, where do you see them being in the next 6 months or 9 months?
Absolutely. So interest rates, since the beginning of the pandemic, have been floating in the high 2s for a 30-year and the low 3s. Right now, we're kind of on the upper end of that scale, in the low 3s, but historically speaking, interest rates are still phenomenal in terms of a 30-year fixed mortgage. We may be lucky and see a couple days here and there in the high 2s, but recently it's been mostly in the low 3s. We're hovering right around 3% for a 30-year mortgage. The 15-year product has been in the low to mid 2s, which has been phenomenal. So once again, historically, interest rates are still fantastic, which is driving affordability with all this appreciation in the market.
So low interest rates are good for buyers, low interest rates are good for people who are willing to refinance and want to refinance. And speaking of that, in general, when do you suggest people refinancing on their property after they purchase a home, for example?
So when there's financial benefit.
Okay.
That's the easiest answer I can give you. Normally it's after 6 months, we wait and see, is there enough financial benefit to the cost of refinancing, going back and paying an attorney to do your closing, paying for another appraisal? Is that going to warrant enough savings?
All these fees that are associated with the process.
You got it. And then in timing, and back to the rate question, there's always some seasonality with rates. We expect rates to slightly move up into the winter months as there's less people applying for mortgages. No matter what's happening in the market, generally that's what happens, but it's never enough for me to tell somebody, hey, if you were thinking about buying it in the year, don't buy, because we don't know what next year holds. As we've all seen in the past, in the recent history, there's a lot of uncertainty. So I feel like, once again, if there's financial benefit and there's a need for you and your family, there's no better time than the present as long as the numbers work for you.
Okay. Well, you know, the lending process is a big topic. I guess we can talk about it all day long. We'll leave it right here. Thank you again, Bobby,
Yeah,
for
thank you for
joining
having
me for this video. I'm sure that many of our viewers will be happy to see it and listen to what we just covered right here, and I'm sure that they'll be able to take advantage with this information when they're ready to apply for a mortgage loan. Appreciate it one more time. Thank you guys for joining us for this video.
Thank you.
I'm here sitting with Bobby Maloney with Allen Tate Mortgage, a senior broker with Allen Tate Mortgage, Charlotte, North Carolina. Thank you guys again, and we'll see you in the next episode.
Have a great day.
Okay, bye-bye.